Welcome D-Traders, it's me Kate Stichina and you are watching a recap of the today Asian session. Many trading floors are closed today on the occasion of the Christmas holidays, so market volatility on a forex will be low today. However, the sentiment in the stock markets was affected by news from China as well as the decisions of Japan and China's central banks. Stock markets have also been impacted by Wall Street movements despite the fact that trading floors are now closed. After the release of the US GDP, home sales and the PCE Price Index, investors started looking for signs of a policy revision by the Fed. Judging by a rise in stocks, they managed to find them. According to the FEDWATCH tool, today more than 63% of traders believe that the next rate hike will be only 25 basis points. The Fed will hold its first meeting next year on February 1. The regulator has more than once warned that it's committed to hiking the rate until inflation returns to the 2% target. Nevertheless, only 37% of speculators are betting on a 50 basis point rate increase, as the fresh macro stats revealed some signs of a cooling in the economy. Risk appetite improved again. Shares managed to rebound, whereas the US dollar tumbled against most of its rivals. The greenback retreated significantly, following a sharp drop in the PCE Price Index. This indicator is closely watched by the Fed. The index fell to 4.7% in November versus the October reading of 5%. The US dollar index indicator kicked off the last trading week of the year on a pessimistic note, moving in the narrow range of 104.10 and 104.50. In the Asian session, it was trading rather sluggishly at 104.20, not far from the close of 104.40. After reaching a 20-year high in September, the US dollar index has already depreciated by more than 8%. It seems that this is not the limit. The yen was also hovering not far from the previous close of 132.80. The dollar-yen pair lost bullish momentum, fueled by the Bank of Japan's hawkish move last week. In his speech in the early morning, Haruhiko Kuroda again confirmed that the regulator would allow yields to rise to around 0.5%. However, Kuroda also dispelled rumors that the watchdog would move away from its ultra-soft monetary policy. The bank will aim to achieve the price stability target in a sustainable and stable manner, accompanied by wage increases, he said in his speech. As a reminder, the inflation target level is located at 2%. However, the latest data revealed a jump in consumer prices to 3.7% in November. Although inflation in Japan is not as high as in the United States, an increase in consumer prices adversely affected the yen. In the Asian session, the dollar-yen pair was still trading in the bearish channel. However, the range of 132.30 and 130 shifted slightly higher compared to the last week. The pair rose to 132.80. Movements of the commodity currencies are also characteristical because of the holidays. Nevertheless, the Australian dollar managed to climb slightly to 0.6723 against the greenback. The risk-sensitive Aussie was able to rebound from the closing price of 0.6717 and get some support as a commodity currency. In the morning, the Australian dollar grew higher following the news from China, Australia's main trading partner. The People's Bank of China injected 216 billion yuan into the banking system to maintain liquidity, and last week the sum totaled a whopping 704 billion yuan. Therefore, the Australian dollar entered the green price corridor of 0.6693 and 0.6733, and the New Zealand dollar also advanced thanks to the risk-on sentiment, and the NZD USD pair was mainly trading in the bullish channel at the level of 0.6286. In the Asian session, the pair was rather volatile, fluctuating in the range of 0.6252 and 0.6295. And that's all for now. Subscribe to our channel and keep close tabs on the market developments with us. See you soon.